Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And here we are on Thursday, the 10th of June, 2021, about 5:45 p.m. Central Time. I want to thank so many of you that showed up yesterday to the SPDR ETF videos, had a lot of questions on them. I just sent out invites for another one I'm doing this coming Tuesday. So in about 6 days, we'll be there, not even that, Friday, Saturday, Sunday, Monday. Yeah, 5 days or so we'll be doing the next one for you. And please remember, if you sign up, show up. If you don't, we're collecting the names of people that don't. And before they start, I just knock you out. You won't be able to get into them. The reason is it is free. It's fast moving. We have limited seats. And that's how I want it to work. So just try it at the very end. People have been good about it, and they'll cancel the reservation, and there's been enough seats. But we are up near the max for the people that are showing up for it. What else do we have? Well, today was CPI, and we have the fastest running CPI now that we have had since the Great Recession. So that goes back to that 2008 period. So what? I know you're going to think I'm crazy, but I'm going to say it. So what? You would expect that we're coming back from normal from a pandemic. When's the last time you talked to anybody that went through a pandemic? I haven't. But you know, everything shuts down, and when everything reopens, there's demand for those goods. Autos, used autos are up year over year about a third. It's hard to believe, about 30% roughly. So that gives you an idea. Why buy a used car right now if you don't need it? Why? Because you can't get a new one in all the places that are there because the production is down. You got to let the supply lines fill in. But if I were wrong and this were really inflation that everything's scared about, interest rates should be going up in anticipation the Fed's going to have to make a move. What if I tell you the 10-year note today cracked under 143? So just last week we were in the 1.5s. Here you are down rather dramatically. We haven't been at these kind of numbers since March. And that's not a long time ago. It's only 3 months ago. But the idea that you're just going up to that 2% number and 3% in another year after that, I think is a lot of nonsense until we know more about the pandemic results as people go back to work, supply chains fill. We may go there, we may not go there. I don't know. And for people to make that guess, don't know. I will stick my neck out though and say next week the Fed isn't going to do a darn thing. That I think I know. Not that I have a line to them, but why would they make a move now? They're in a sweetheart spot. They've got jobs data slowly growing, CPI numbers growing, not harming anything. And if you look where they were, the same CPI was in the last reports in this one, not doing a lot of harm to the economy. When you look at ARK, it's coming up. Why? Low interest rates help the type of companies that Cathie Wood's ARK investment works with. They're high tech, they need a lot of money. Low interest rates help. So that's one of the things that's going on. You've got a pattern with today of higher lows, higher highs. You'd hit a snag if the market took out today's low, which was 112.14, either Friday or Monday. That would be a problem, and I think you'd then go back to the 18-day average. Until that happens, or unless it happens in the next 2 days, I think the next target that can be attained is 115.88, the 200-day average. Again, that was an important number last time, and it should be just as important as between that and the upper number, which is the upper Bollinger Band at 116.45. That's a lot of resistance. The market is staying in bias upward, trend upward. That's the resistance points, and you're overbought. When you come to BBEU, you have a market that is sitting here that is what? Fully embedded. Fully embedded attracts buyers. Why? It tells you the momentum is locked in, and when it's locked in, there's a series of moving averages you use on breaks to try to come in the market. At the end of this video, I'm going to have a video for you on my charting course. That's where all that is taught. And then I have enhanced courses that teach this, but you might want to take that. It explains so much of this, and it's not expensive. It's a great graduation gift, by the way, for if you want to get somebody going in the world of charting. Higher lows, higher highs, looks good to me. PAVE, I'm not expecting much. Now, I did hear late today that it appears that there's been a bit of a deal in that G20 group of senators that are talking, that maybe they've reached something. In all fairness, I haven't read the article, but I can just see the market is doing what I said. It's whipping back and forth until there's more to know. This chart, maybe I'll take it off for a while and put Apple back up here, because I think that does you more good than PAVE right now. AMC, well, that thing's fallen back. You were just up to, I want you to look at this, this week you hit 60.62, and all of a sudden you're back to 39.71. Little reality coming in, and of course this company's done phenomenal by getting the stock up via Reddit, not their own work, and selling stock. And the insiders, I'm sure they're selling like there's no tomorrow. They never thought this was going to happen from back here at $4 a share. I still don't know what their business model is. Trend is up, but momentum is down. When the two fight each other, be careful. In the semiconductors, still bullish. As long as you keep that embedded reading, I'm looking for higher prices. A key resistance point looks to me like it's going to be the 100-day average at 181.88. If you took out 176.95, that'd be a problem for the chart. But until that happens, I'm still looking for the higher price. POTX, as I told you, I think this is too much resistance to overcome just now in an overbought market. So the trend here had been up. You got up to a combination of the 100-day average and the upper Bollinger Band, right where I'm pointing, and this has just been borrowed time as the market might want to slip back a little bit. ESGU, embedded reading, I'm looking for the upper Bollinger Band potentially to be hit there. Did we have an outside day up today? So yesterday's range was 97.03 to 96.59, and you do. You have an outside day up. So what number don't I want taken out? Today's low of 96.42. Barring that, I think the market's trying to say 97.60 could be right around the corner. XLE. So now we're seeing the energy slip back, but no damage. You haven't lost the ability to embed. Both numbers today finished over 80. If we go to Wednesday, both numbers were over 80. And Monday, they were not. So Tuesday, rather, is the day I want next. Tuesday, they were. Tuesday, Wednesday, Thursday, you're embedded. Until the red line closes under 80, these are the kind of breaks the traders will look at. When you make a higher high first, did you take my enhanced Bollinger Band course? If you did, you know what I'm saying. If you didn't, you hear me saying, well, you should be buying the breaks. Should you? Let's go next to the EFA. Where did you fall? Right back. So the emerging markets rolled over again. A big failure today. Not necessarily the beginning of a bear move, but the end of this run on a bullish move that began down here, culminated up here, and now that you've taken out a previous low, you've stepped out of the trend. That's the way I look at it. Gold. I think gold is super interesting here. You might get this pop. If the market can clear this 177.80, and it hit 177.85 today, what I told traders this morning was that could make the market want to pop right on up to the upper Bollinger Band. This is what I was telling them in my morning spider ETF. I wouldn't want to see today's lows violated now that you have an outside day up. Gold miners, this was the spot to be out of all shorts. That's all. What do you do the first time you hit a lower Bollinger Band? You hadn't hit it there. What do I teach you? And I even say it here. That's where the pros are waiting to get themselves out of Dodge. You went through it. You went through it by 6 cents, right back up. TLT, it's the same thing on the upside. And I realize this market looks like it's going to run. Bye-bye without me. The odds of staying over a Bollinger Band 5% of the time. And when you get up there for that, it sort of suckers you in. It's going to keep going. And sometimes, I guess it could, not with this guy there. FXE, notice how you fell back just now. You're not trending in the foreign currency. Got a higher high, lower low. So I put it all together, try to figure out what to do with it, and that's what we do each morning. But there's more to this. As you watch me do this, what a lot of you don't understand is it's so easy to learn these techniques I have. There's 5 technical indicators. Each builds on the other, and each is a filter on the other. It starts with the swing line. I teach you how to draw them on your chart by hand. I start with PowerPoints, then I'm going to walk you right through charts. You're going to get the same charting software. You can draw, do everything on it. Window envelopes, slow stochastics, my way of learning it so that you get there. Then the basics first of Bollinger Bands, and after you take the course, you might want to take one of the enhanced courses. I'm probably going to do now an enhanced slow stochastic course. That'll probably be the very next one I do. But in this, there's 54 videos. It's approximately 8 hours of learning. It's not a race. I want you to take this slow. Now, I realize you're SPDR ETF people, and you're going to say to me, well, Ira, you know, that could be futures. What do you do with this? Instead of the morning futures video, you can take a choice. I will swap for it with you the morning SPDR ETF video for the 30 days. I'll still give you my market research, just not the morning futures video, but my written research on futures and the financial markets. So I will honor that part with it to make it very easy. And as I said, this works in pretty cool as a gift. And the reason is you give it to somebody young and you get them on the idea of what is a chart, how do you go about it if you want them to learn the art of investing. Now, just go to our website, under the keyword education. It's all there and it's explained there. You can always call my staff. They'll work with you and get you set up. You tell us when you want the course to start. And from the day that you let us know, that's when we turn on all this for you. Is that fair enough? So you can give it as a gift. It didn't start until it gets activated. I'm Ira. Thanks for watching. I'll see you tomorrow.